Are you looking for a way to grow your wealth without paying extra taxes? Well, what if I told you there's a legal way to save and invest, or why your profits remain tax-free? Hi guys, welcome back to All Things Wholesome. This is a channel where we discuss all things that teaches about money skills. In today's video, I'm going to be talking about tax-free savings accounts and how they work here in South Africa. So if you are someone who's looking to invest or save long-term and having tax-free returns, then you should continue watching this video because this video is for you. So I'm going to be doing 4 videos of this topic. So it's going to be different topics, obviously, but still talking about tax-free savings accounts. So this is part 1. In today's video, I'm going to be assisting by asking the questions that you at home might have so that Andile can answer those questions for you. So can you please elaborate on what a tax-free savings account is? Can you please just simplify it for even a child to understand what this tax-free savings account is? So a tax-free savings account is a type of account where the money you put in can actually grow without you having to pay tax on it. So that's the simplest way I can put it. A tax-free savings account is an investment vehicle that was introduced by the South African government back in 2015, and this was to encourage people to invest their monies. So I think they were looking at people are not investing or saving enough, so what can actually encourage them to save? So maybe they came up with the thing that if we don't tax their returns, maybe these people can start saving. So it was just a solution that they came up with to encourage more people to start saving. If this was introduced by the South African government, there must be laws that are attached to these tax-free savings accounts. So can you please take us through a few of these rules that governs this tax-free savings accounts that we have? So obviously these tax-free savings accounts may come with laws or restrictions, if I may say. So let's look at the contribution limits. So we have annual contribution limits of 36,000. So that is the maximum that you can contribute in a tax-free savings account a year. So that's the law that is set by the government here in South Africa. And then in a lifetime, so as I am living, as I'm Andile, I am allowed to contribute 500,000 in the tax-free savings account, and I'm not allowed to exceed 500,000. Once I reach 500,000, I must stop contributing to the tax-free savings account. So meaning that if maybe you contribute extra, that extra is going to be taxed 40%. Let's say that this year 2024 you've been contributing, and maybe you contributed 50,000 when you adding this year's contribution, and it adds up to 50,000. So from that 50,000 you minus the 36,000, that is the allowed amount. So the extra amounts that you have added is 14,000. So that 14,000 will be taxed. So the 40% of the 14,000 is going to be let's see, it's going to be 5,600. So that's how much you are going to be taxed on that extra. So let's do another example with a lifetime contribution limit. So that is going to be a 500,000. So let's say that you've contributed 600,000. So obviously the extra contribution will be 100,000. So 40% of 100,000 is 40,000. So that is how much you are going to be taxed. So I think that we should just stick to the limit to avoid taxes, because that's the whole point of you opening this account, is for you to have no taxes. So I understand that there are limits to these contributions. So what about withdrawals? What can you tell me about withdrawals regarding this tax-free savings accounts? Will I have to wait a certain period to access my money, or yeah, just tell me more about that. So the nice thing about tax-free savings accounts is that you can withdraw anytime. But the thing that you need to take note of is that the funds that are withdrawn cannot be replaced. So what I mean by this is that once you withdraw a fund, it's not that you can replace it again to make the lifetime or the annual limit. So let me make an example. Let's say that you have contributed 36,000 for the year of 2024. So, and then you decide that maybe you are going to withdraw 1,000. So by withdrawing that 1,000, you're not going to be able to replace it, because already you've contributed the 36,000 that is needed for that particular year. As I told you, that 36,000 is the contribution limit for a year. So if ever you withdraw that 1,000, you're not going to say, okay, I'm gonna contribute it back next month. No, you are already done. Whatever you've contributed that year, it is that amount. Whatever you withdraw, it doesn't count. Like, it doesn't count. So if ever you've reached the limit, 36,000, then that's good. Whatever you withdraw from there, you can't say you are going to replace. You understand? Yeah, that's it. And also, if the year ends without you getting to 36,000, maybe let's say you've reached 20,000, that's what you have contributed that year, 20,000, you know. Yeah. And no, there are no punishments for not for not reaching the limit. It's just that you are delaying yourself, you know, but there's no penalties or anything. Just from my short research, I saw that tax-free savings accounts have investments in them. So how can you make money in a tax-free savings account? Like, what investments are allowed in a tax-free savings account, and what investments are not allowed in this account? Tax-free savings accounts can be invested in a variety of financial instruments, which includes ETFs, exchange-traded funds. I've talked about ETFs in my channel before. I'm going to link the video above so that you can get more information on ETFs and how you can buy ETFs to invest in your tax-free savings account. So ETFs are securities that tracks an index of certain assets that can be traded on the stock market. So you buy ETFs on the stock market. You know, they are traded like shares. So yeah, that's the first. It's ETFs. Or we also have fixed deposit accounts. So this is a savings account where the interest rate is fixed, as well as the maturity date. Yeah, so you can just contribute. It's like a savings account, and it has interest. So we also have unit trusts. So a unit trust is a collective investment scheme that pulls money from various investors into a single fund to invest in assets like bonds, stocks, or property, which is managed by a fund manager. So we also have bonds, debt securities issued by entities such as government or corporations. So you are basically lending money to the government or businesses, and then you get interest. So these are the investments that are allowed in a tax-free savings account. So there are certain high-risk investments, like direct investment in individual stocks or property. Those are not allowed in the tax-free savings accounts. Like, they're not permitted by the government to be in that because they are high risk. So can you take us through the advantages of this tax-free savings account? The benefits of this account is that your interest, dividends, or capital gains of your investment or savings are not taxed. So that's the best thing, that whatever you put in, whatever you invest in, whatever gains that you may have, it may be interest, it may be capital gains, or it might be dividends, you're not going to be taxed. So the second advantage is that there's no tax on your withdrawals. So you can withdraw anytime, anywhere, and you will not be taxed or penalized for withdrawing. However, you need to understand that whenever you withdraw, you cannot replace that money, because it's going to count against your annual or your lifetime contributions. So that's the only thing that you need to keep in mind. Whatever you withdraw, it's yours, all of it. Whenever you decide, you can just decide to withdraw next year, and you are not going to be taxed. So that's the nice part about it. But also I would encourage you to try tax-free savings accounts for a long-term savings or investments, because I think they're good for that. Whatever interest that you are going to have, it's going to compound obviously over the years, and it's not going to be taxed, and that's the nice part about it. That is a lot of information to have, but now I want to know who can have this tax-free savings account. Is it for everyone? Is it for old people? Yeah, who can have this account? If you are a South African citizen, a resident, you have your South African ID, whether you are a minor or you are an elderly person, you can have this account. So it's for any South African citizen. You just need to have your ID, and yeah. And also for minors, you can open these accounts for them, and they can start gaining interest or dividends or capital gains that are not going to be taxed. So yeah, how many tax-free savings accounts does one person needs to have? Like, can you please elaborate more on that? So the nice thing about tax-free savings accounts is that you can have as many tax-free savings accounts as you want, but with different financial services providers. So you can have one tax-free savings account with a particular financial services provider, and also have another tax-free savings account with another financial provider. You can have your tax-free savings accounts with Alexander Forbes, Sanlam, Old Mutual, Capitec, Standard Bank. Now the last question that I have is, where can I open this tax-free savings accounts? Because I'm fired up. I want to invest. I want to save in this account because I want to save on my taxes. So yeah, can you please tell us where can you open this tax-free savings accounts? So tax-free savings accounts are offered by banks, insurance companies, investment firms, and any other financial service providers in South Africa. If you have any question for me, please do not hesitate. Please comment down below and I'll try to answer your question. No, what am I saying? I'm not going to try. I'm going to answer your question. I'm going to answer your question, and please don't forget to give this video a thumbs up if you liked it and you found the video informative. Don't forget to subscribe to the channel. So the more the merrier, you know. Do not hesitate to hit that subscribe button. If you find this video for the first time and you've learned something from me, please join in the family, and stay tuned for part 2 of this video series. So as I did say that I'm going to be having 4 parts of this video of this topic. So yeah, thank you for allowing me in your space and lending me your ear. Always remember that I love you. Have a lovely, productive day. Bye.